Did you know that Africa's combined GDP is around 3 trillion? But this massive number hides a complex story, a story shaped by geography, exploitation, and a resilient spirit of innovation. Welcome to Digital Animated Explainers, where we are diving deep into African economics, visualized. We'll explore the forces that have shaped the continent's economic landscape, from ancient empires to the digital revolution. Africa is often described as the world's fifth largest continental economy, comprising 54 sovereign nations. Recent estimates place its nominal GDP close to 3 trillion and its purchasing power parity GDP over 10 trillion. That's a lot of potential. But to understand today's Africa, we need to journey back in time. Long before colonial borders were drawn, Africa was home to thriving regional economies. Trans-Saharan trade networks connected North Africa with the West African kingdoms, while the Indian Ocean trade linked East Africa to Asia. The Mali Empire, the Songhai Empire, Kanem-Bornu, the Asante Confederacy, Edo, or Benin, the Swahili city-states, and the Ethiopian highland states were major commercial players. They traded gold, salt, textiles, and other goods across vast distances. These empires developed sophisticated systems of governance, taxation, and trade. But this pre-colonial prosperity was tragically disrupted by the transatlantic slave trade. Millions of Africans were forcibly removed from their homes, devastating communities and destabilizing states. The slave trade didn't just rob Africa of its labor force, it also redirected incentives towards raiding and militarization, hindering long-term economic development. Some research suggests that regions most affected by the slave trade still experience lower levels of economic development today. Then came colonialism. European powers carved up Africa, establishing artificial borders that often disregarded existing ethnic and cultural boundaries. Colonial economies were designed to extract resources, not to foster broad-based development. Railways and ports were built to transport minerals and cash crops to the coast, while internal links between African regions were often neglected. This created extractive corridors, leaving many African economies dependent on exporting raw materials to foreign markets. After independence, many African states inherited weak institutions, narrow export bases, and underdeveloped industrial capacity. The Cold War, debt crises, and structural adjustment policies further constrained economic growth. Many African countries remained heavily reliant on commodity exports, making them vulnerable to price swings, currency shocks, and debt crises. But the story doesn't end there. Africa is undergoing a profound economic transformation. The services sector is booming, driven by the rise of mobile technology, finance, and retail. According to McKinsey, services employment rose from 30% in 2000 to 39% in 2019, while agriculture fell from 58% to 49% over the same period. Kenya's M-Pesa revolutionized mobile money, providing millions of Africans with access to financial services. Nigeria, Egypt, South Africa, and Kenya are emerging as major hubs for startups and digital innovation. However, this growth is uneven. Many African countries still struggle with small domestic markets, weak tax bases, and high levels of informality. Intra-African trade remains underdeveloped, with many countries trading more with Europe, China, and the United States than with each other. The African Continental Free Trade Area, or AfCFTA, aims to change this by creating a single market for goods and services across the continent. If successful, the AfCFTA could unlock trillions of dollars in new trade and investment. Africa also faces a demographic challenge. Its young population represents both an opportunity and a risk. If enough jobs are created, Africa could become a major consumer market and a global powerhouse. But if not, youth unemployment and migration pressures could intensify. Infrastructure remains a major constraint. Power shortages, port bottlenecks, and weak road networks hinder economic growth. Expensive logistics and unstable currencies add to the challenges. But despite these obstacles, there are reasons to be optimistic. Africa is a continent of immense potential, with a growing population, abundant natural resources, and a vibrant entrepreneurial spirit. To unlock this potential, African countries need to diversify their economies, invest in education and infrastructure, and strengthen regional integration. The continent must move beyond its dependence on raw materials and develop its manufacturing and service sectors. It must also address the challenges of corruption, inequality, and climate change. The future of African economics will depend on how these challenges are addressed. Will Africa be able to break free from its colonial past and forge a new path to prosperity? Will it be able to harness its demographic dividend and create opportunities for its young people? The answers to these questions will shape the continent's economic future for decades to come. The story of African economics is not just about numbers and statistics. It's about people, communities, and nations striving for a better future. It's a story of resilience, innovation, and hope. And it's a story that's still being written.